Shrugging off the mortgage mess.
Is that a positive sign? And will declines in oil continue to fuel this rally? We have an all-star lineup to talk about it, including Michelle Girard of RBS Greenwich Capital, Fox contributor Phil Flynn of Aileron Trading, and our Bulls and Bears, Gary Kaltbaum, Pat Dorsey, Peter Schiff, Bob O'Brien. Is there anybody that we don't have? Let's see, Michelle, I guess your issues with the earpiece have been fixed. Is that correct? You can hear me all right?
I can.
Is this an oil rally? Is that what we've been seeing?
Well, there's a lot of good news with oil. There's no question that as oil prices come down, fears about the economic outlook fade. If this is real and it's sustained, we're going to see further declines in gasoline prices. That's going to take a lot of pressure off of the consumer, particularly as we look ahead, not even so much to the back-to-school shopping season, but that all-important Christmas shopping season. So it is good news, and I think that to some extent that's exactly what the market is reacting to.
Peter Schiff, is that pullback real in oil?
No, not at all. I mean, this is still a bull market in oil. It's still a bear market in stocks. What you're seeing is a lot of short covering in the stock markets, and people are taking off some of the trades where they were long energy, short the financials. So you're getting a bounce in the stock market. It's a bear market bounce. Sell into it. And the pullback in oil is not going to last. There's a rally in the dollar right now. That's not going to last. The fundamentals are awful for this market, and people are ignoring it right now, but they will be reminded of it shortly.
Well, fundamentals might be lousy, Phil Flynn, but it looks like this bear in the oil market is real.
Well, technically it is. Some people say 117 makes it an official bear market. But, the big question is, if things are so bad for the stock market, Peter, how can oil continue to rally when we continue to see this incredible demand destruction? That's a question I'd like to ask.
We're not seeing incredible demand destruction. I think we're going to see a lot of demand destruction in America for a lot of things, not just oil, but we're going to see demand creation every place else. And with a weak dollar, it's going to be the price of oil going up for Americans as it gets cheaper for a lot of other people.
But Bob O'Brien, the 300-point gain yesterday, we had Brenda Butner sitting in Peter's chair saying, I don't believe it. That was yesterday. Do the technicals, do the things that you look at indicate that it is real or that it is just a bear market bounce?
If nothing else, I think the technicals are suggesting that we may be establishing a pretty good base here. Now, that doesn't mean that we go to the moon from here. But if you look at the sentiment indicators, all the bullish bearish sentiment turned to, historic readings earlier this week at the end of last week. If you look at the trading volume yesterday, it was one of the first days we've seen where you had about 90% affirmative volume taking place here. So there was something under this. This wasn't one of those light trading days where the market just kind of ran away. But, Peter's case on the fundamentals, I think, is spot on. We're going to have to improve some of these fundamentals before the technicals are really going to matter much at all.
And Gary Kaltbaum, as long as the Fed is worried so much about growth that they're not raising interest rates, we do have the downward push in the dollar, meaning that inflation could get worse.
Well, look, I've got news for you. The dollar's starting to act better here, and it's right at some very important resistance level against all currencies. And if it can move above it, I think there's a shot here for better action. And look, for me, and this is all I've been saying every day, watch oil prices and watch the financial stocks. If the day the financial stocks decide to top out, that'll be it for the market because they have been leading both up and down. So far, they continue to have a bid, whether the fundamentals are bad or not. And, Peter, you need to know the market is a discounter of the future, and you never know if things are going to start getting better in the next few months, and the market's starting to see it here. I'm still taking it day to day. I'm not totally convinced. I'm in a little, and I hope
Well, the market's been wrong before, and they'll be wrong again.
Pat Dorsey, are you watching financials, or are you looking as a value guy at other things, and what are they?
Well, I think the important thing to realize is that, aside from, the energy financials that dominated the headlines this year, you take those two out of the S&P, and corporate profits are up about 4% year to date. And in the forecast for next year, there was about 14% growth year over year. That seems a little high to me, especially when you've had this weakness in the consumer, you've had this weakness in financials, but the rest of the market has stayed fairly strong, even amidst slowing growth. And what that tells me is that, well, you typically, in an economic cycle, the rest of the market has to take some pain too. And so this may be a little bit more drawn out than this strong snapback in the financials would suggest.
So, Michelle, where do we hide for cover if we want to take advantage of what's happening with regard to the advantages of lower oil prices, but we don't want to get in financials? Where where do we go?
Well, you know, if it's sustained, and I don't know, I'm not an expert on the oil market. I'm disappointed to hear that this may be a head fake, but if it's real, and I think that there is something, it looks like it's more than just a head fake this time, then clearly the retailers are going to do much better in the second half of the year than they've done, because again, fears about the consumer will fade. And I would just echo too, the performance of the dollar very quietly in here has strengthened, and we're at key levels there. You know, let's face it, Europe, so much of the growth areas overseas in the UK, some of their data have gotten really bad lately, and so while we're not getting better, but we're not getting a whole lot worse, and that situation seems to be weakening, and that's why the dollar is starting to look a little better.
I do want to make one point. Watch oil here 100 times a day. Just watch it every hour. There's been an hour-by-hour correlation between the price of oil coming down and consumer stocks going up. There is an absolute link.
Peter,
and if oil goes up, not good.
Gary, it makes a point that some of the retailers had started to perk up their ears, and we saw, say, for example, Polo Ralph Lauren today doing very well. That may just be an individual story, but you don't believe that the retailers...
No, the retailers are in trouble because their consumers are in trouble. They don't have any money anymore. They can't borrow. They have no more home equity. But, you know, the problems for the global economies, they're all related to the money that they loaned us that we can't pay back. These are short-term problems for the rest of the world, but they're structural problems for our economy. So I think there's a lot of opportunity. These foreign markets are pulling back, but their economies, I think, are going to do very well.
Yeah, but Phil, we can take advantage of that oil-wise, because if indeed it's true that there's a slowdown, we've got news that China is going to slow. We heard it was going to slow down after the Olympics. That means demand destruction as far as China goes, which was one of the big gobblers of oil. So that means even more downward pressure on the price of oil, right?
I would agree. You know, I would say Mythbusters on this global economy, because there's been a myth that no matter what happened with the crisis here in the U.S., that the rest of the world is not going to be affected. That is a myth. It's being proven. We're going to see more slowing in Europe. We're going to see more slowing across the globe. And that's going to eventually make us look a little better. Not because we're better. It's because they're going to get worse.
But Bob O'Brien, you get this story today that Morgan Stanley is telling thousands of clients, hey, I know we said you got these home equity lines of credit, but we're shutting them down right now. It just makes you wonder if that will crimp consumer spending and how that'll sort of react as far as a domino.
Well, it already has crimped consumer spending, Liz. We've already seen the consumer retreating. That's why all these retailers, particularly at the more high end, the department stores, for example, are suffering so badly because people don't have access to capital under any circumstances. The thing that's fascinating to me, if you're talking about a recovery in retailing, why is MasterCard at a 4-month low?
Yeah. And, you know, of course, consumer spending, cutting back on consumer spending is a good thing. That's what we need. Consumers have spent too much money. That's why we're in this mess. Unfortunately, it's the government that's trying to interfere with the free market, that's trying to rein in all these excesses by trying to encourage more spending.
By the way, I know why MasterCard is low, because I've been getting about 20 emails a day from Peter Schiff telling me why it's low.
Wait a minute.
Dorsey, what about retail? Is there anything you're going for in retail?
I think there are some things you can look at on a long-term basis, but, I mean, don't hold your hopes out for some kind of giant Christmas rebound, because heating oil prices are going to be very high this winter, even if oil keeps coming down. Natural gas remains fairly high. That's going to take a bite out of the consumer. And let's not forget this negative wealth effect of the housing market. It's very real, and you're seeing much weaker numbers in the weakest real estate markets for consumer spending than you are in other areas of the market, and housing is not going to have rocketed back 20% by Christmas time. So I think people's moods are still going to be down at Christmas. Long term, there is value out there in Costco's and some other companies, but don't be looking for some second half, rebound in retailers to save your bacon for the year.
I can't believe nobody tore each other's heads off here. A lot of different opinions.
That was a good discussion. Thank you, Gary.
I'll volunteer.
Thank you, everybody.